Friends, Deepak here from Let's Get Rich. In this video, we will be discussing about Panchabhootas of investments. As we all know, Rigveda speaks about the five essential elements, the harmonious interrelationship of which maintains the life on this earth. The five Panchabhootas are water, fire, air, akash, and earth. So let's come to a basic thing. Don't just save, invest too. So we all save irrespective of our absolute level of income. Saving is work half done. It's equally important to make these investments grow. Just like we have Panchabhootas, we have five asset classes in which we can invest and achieve the above target. The above target is making your savings grow in proportionate to the level of inflation at least. So what are the Panchabhootas of investment? So here on the left side, you see it's the Panchabhutas of the mythology are space, water, fire, earth, and air. And on the right side, you see the five asset classes. So you have real estate, commodity, equity, debt, and intellectual assets. So these are the five Panchabhutas in which one can invest and make the money grow. Saving is just not sufficient. You have to invest, you have to dedicate the investments for the savings to grow proportionately. So let's come to one of the first Panchabhuta, that's debt. So that is basically in simple terms, lending money and being a money lender. So you're basically lending money to an entity. So in return for which you get a fixed payout in the form of interest. We call it as an interest income. So whether it's a saving bank account, fixed deposit, corporate bonds, all of it works with the same principle. When you're having a saving bank account with the bank, you're basically lending money to the bank, and in return, they're giving you a saving bank interest rate. When you're dedicating that same money for a fixed duration with a longer commitment, that becomes a fixed deposit. Much better rates are given and much better returns are given. Same thing with corporate bonds. Corporate bonds are the bonds held with the big corporates. So that also works. You are basically acting like a money lender over there. And if you hold that till the duration, you are getting the returns back. So you give a certain amount of money for a time duration, and in return, you get a earned fixed payout. That's interest income. So the first bhuta is simply you be a money lender. Second one is by investing in commodities. Commodities we normally refer to gold and silver. So traditionally, gold and silver have found place in investment portfolio of many investors, mostly related to the cultural background. Third, bhuta is real estate and its equivalent. So real estate has long been the favorite of many investors with all its pros and cons. Fourth one is equity, either having your own business or investing in someone's business. So this is the least explored asset class. So equity is all about either you have your own business. So there are two simple ways of getting rich. Either you have your own viable, attractive business, or you invest in someone's established business. Not everyone has a unique entrepreneurship skills, and option one is not suitable for all because all cannot have their own attractive business which is viable. Anyone and everyone can start a business if they have the working capital, but if you look at the statistics, not all business lasts beyond 5 years. So that's the statistics. So if you come to option two, that is investing in someone's established business which is listed on the stock market, that is equity all about. So in this case, in the option two, everyone and anyone can get rich by investing in others' business. Equity is the term used for it. The fifth asset class is intellectual assets. So intellectual asset is dependent on person to person. You develop or unique skills which makes you grow your human capital. Have multiple streams of income by way of your intellectual ability. Increase human capital and move ahead in the ladder of prosperity. So how do we invest in this Panchabhutas? We spoke about all this. So intellectual assets have to be self-developed by working on ourselves. There are two ways of investing in the remaining four asset classes. One is individually buy them. Real estate, you buy a real estate plot, flat, apartment, or villa, or whatever it could be. So individually buy them. Gold, you buy gold coins, gold ornaments, silver ornaments, something like that. Fixed deposits, you open up a account, you open up a FD with certain bank. So individually buy them, or buy them through a vehicle of investment instrument. So mutual funds and ETFs. ETFs are exchange traded funds, which cater to investing in all these four of this Panchabhootas. Intellectual, we cannot invest financially, but we'll label it as Panchabhootas again. So mutual fund is one-stop solution to invest in all the remaining four Panchabhootas of investment. This can be achieved with immense flexibility, liquidity, keeping cost of investment low, and also keeping the investment simplified. So key takeaways are: concentrate on your primary profession and increase your human capital. Increase saving rate. Invest in the Panchabhootas in the most simplistic and easy way without compromising on the liquidity and flexibility. So key takeaways: do consider mutual funds as the investment vehicle for meeting all your investment needs. So mutual fund is one-stop solution to a complicated and variety of financial needs of any individual or a family, which still has a lot of underpenetration. So do consider it. Happy investing. Let's get rich together.